All right, what's good, folks? So I'm gonna make it very simple. I'm gonna show you how my system works. This is exactly what I do literally every single day in the market, and this is how I'm able to extract money. This is no bullshit, right? Everything is probabilities. You still will have wins and losses, but understanding the mechanics of how markets work and how price action moves will allow you to then have your edge and create your edge sensibly. All right. You don't need a ton of indicators, none of that bullshit. But what you do is actually have that understanding of how it mechanically works. Then you can use the tools to then amplify and use as confluences to make it 10 times better. So here's what we are going to do. We're going to break down what the mechanics is. Then I'm going to show you in real time what it looks like, right? So based on this example, this is the bullish side over here. If I just do this, bullish, and then that's here, and then this over here obviously is bearish, right? So let's do this. Cool. In a bullish example, you'll have an extension or a push, then you'll have a pullback. This is a pullback. Then you'll have a continuation, which will go and trade through liquidity, because liquidity is generally going to be clouded up here, people trying to short the markets, right? So there's a lot of liquidity right here. That's what this is, right? And you're trying to look for trades anywhere in these areas now for continuation to come out of there, right? In a bullish trend. In a bearish trend, it's the literal opposite. It's the same thing. So you have that push down, you have a pullback. See the same thing? Pullback. It creates bearish liquidity. A nice bearish. Now you're looking for a continuation for a bullish trend. You're looking to get involved on any one of these lows that happens internally, right? It's simple. Now let me show you what that looks like in the real chart. I have it marked off for you here. It's everywhere. It's fractal, right? So if you see a push here, come back down, not breaking the lows, pushes and breaks highs, come on, you're bullish. Bullish liquidity is being taken here, right? This is where people had their stop losses, thinking, okay, it's going to continue short, but now it starts to break highs. So when you see it pull back here, what are you doing? You're going down in here to look for highs to trade through. Because remember, the same model is this. If it pushes up, comes back as a pullback, leaves a high and creates that liquidity, then you're looking for continuation. What happens in here, friend? What happens? You see price push up, pull back. Here's the high that it wanted to trade through. That's the high. So this very candle right here that passes through here is where you would have gotten in, all right, for that long. As soon as it crossed that high, your stop loss goes below the low, which is this candle right here. Because see, push up, pull back, stopped here, crossed here. That's it. Now you go for whatever you go for. I generally go for like a 1 to 5. So I would have came out like somewhere here. Like if you were going for anything under that, you hit it. Like if you're going for 1 to 7, whatever, you hit it. And this is just one time frame, by the way. I'm just showing you that. And just to like further solidify it, look at all the other highs that it created. So this one here, this one here, this one here. Shit, I need to turn that thing on. This one here, and that's it. And you see it continues, but then it goes to consolidation and then fails. Great. You'd have made your money here anyways, right? And this is just how the market works. On the flip side, on the bearish side, remember, so here's your push down. So if I show you in real time, here's that push down. Here's the pull back. And what you're doing is looking for continuation, right? To trade through the liquidity target low. Let me draw it in this one here so you can remember. Here's what that looks like. Shit, hold on, where's that? Yeah, cool. So bearish liquidity. Here's that bearish liquidity right here, right? How you would have gotten involved in this? Let me show you. You see the push down. You see that it's breaking lows. Here's the low that it recently broke. So when it pulled back up, leaving this low right here, any one of these that crossed that, you see, you could have been in that. But not only just that, you could have fractally looked on this too and said, all right, if it's going to be bearish, then any low that I see that it creates, I can get involved in. See, I can get involved in. So you could have literally gotten in here stop loss right above the high, because here's the high, push up, never crossed that again, came back low. You could have been in right there. You could have been in right here with the high stop loss right here. You could have been in right here with the stop loss up here, and look at it on repeat. All right, here's another low. Sorry about that. Here's another low. Here's another low. Here's another low. And in a trend, it's going to continue doing that. Look at all of these opportunities and all the highs that you could have protected yourself with. That's a protected high. That's a protected high. Protected high. Protected high. You could have been in on all of those. Let me show you. Protected high. Protected high. Protected high. All right? Well, not this one, but yeah, same thing. And then this one here as well. Protected high. All right? So you could have been in on all of these. And fractally, you would be scaling down into different time frames as well. But this is just how I'm showing you on one time frame, right? It's so simple. It's unbelievably easy, and it's the same model, right? If I literally just make it new, it's just a push, a pullback, a continuation. You're looking for trades in here to cross the highs. See, that's it. Because you'll have the mini highs in here that are being crossed before of this overall fractal high. You understand that? So the 15-minute pushes, the 15-minute pulls back. On the 1 minute, you have this infinite. So let me show you that now. For gold yesterday, right? Check this video out now. I'm going to show you literally how my momentum plot works and stuff like that. Literally right now. So let's go. I'm on the 15-minute. Right now it says wait for MP, which is wait for momentum plot. And then when it says tradable is when I can trade. So right now it would just be, let me do this. So you can see the 15-minute here, 2-minute here, 15-second here. All right, let's go. We're literally going to trade this through right now. I'm going to show you exactly how it goes. All right, so I'm here chilling. There's nothing for me to do. Then that comes in. Wait till you see this say tradable, because if my higher time frame does not give me a momentum plot, there's nothing for me to do on the lower time frames. It's just a bunch of noise, right? Even though this move looks so good and blah, 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 guess what? You literally would have never been able to predict that anyways. So don't play yourself thinking that, oh, I want to get in on the moves early. No, you want to get in on the right moves, not the move early. There you go. So as soon as this one here closed and open, tradable. What does that mean for me? My momentum plot is there now, showing me, yo, there's momentum in the market. What am I doing? I'm going down to my middle time frame. So highest, middle, lowest. All I want right now is my 2-minute to come down and tap the MAs for me to then look for an entry down here in the 15-second. That's it. And just look for continuation, because guess what? As I can show you in the model before, what are we doing here, guys? We're breaking highs. Breaking highs. Breaking highs on the 15-minute now. Breaking highs all this time. Breaking highs. Look at all this. All these highs right here. Breaking highs, breaking highs, breaking highs. And now we make this high that just got broken. We're bullish. We're fully bullish, right? Therefore, I am not looking for sells. I'm looking for buys, especially being that we just got the momentum plot here. We just cleared out that liquidity there, right? So what I'll do now, I use that as confluence. I see that we're obviously bullish. Don't look so far back here. It's just irrelevant information at that point, because this to right here is already 21 hours of information. You don't need more than that, bro. So here's this. Look, now I'm simply waiting on the 2-minute to pull back, tap here, and then go. So I'm waiting. Look on the time frames. Pay attention. I'm now waiting for this. I already got what I wanted over here. Now I need to wait for this. It's no reason for me to look down here yet. I need to wait for this now to shape up. So first shape up right here, tradable, ready to go. Now I have the conditions here. I just need this to come back and make a MA top there. As you can see, guess what it did? Made a new high right here. So bam, that's my liquidity target, right? So bullish liquidity, that's my target. I just want this to come back down to the MAs if I get that, right? So I'm here chilling, waiting, nothing to do. Then it comes back down. I like what that looks like. Bam, we get the top. This top here, for me, is very valid. Now, to me, that's a very good pullback. Why? Because I see that generally When it goes, tops the 6, goes, tops the 6, goes, tops the 6, goes. In many examples, goes, tops the 6, goes, right? So that's what I'm looking at. So I'm literally just looking to see history repeat itself. Now, what's the model, folks? I just said that this is the model. Look over here now, because see, we tap over here. Now I'm looking for my entry over here. Look, that's the model, right? Which is a push up, pull back, trade through the high, right? I said that, right? Okay, so where is this? Let me fit this right over here, bro. Here's that push up, pull back, and right now if it trades through the high, I'm in that shit. That's the high right there. Bullish liquidity. That's where I'm targeting. That's where I want to get in from, because this is the model. Don't forget, this is the model. Where is it? Here's the model. Remember? Here's the model. Trading through the highs. That's it. So if I saw my momentum come in, I see my 2-minute pullback. Don't forget, look on the 2-minute. The 2-minute is also now creating new highs. Like that's a new high. Sorry. This is a new high that it just created and traded through, proving we're bullish. Then this is another high that it probably wants to go through and continue the bullish trend, right? So how am I going to do that? I'm going to scale down and go fractally lower and get in even earlier. So same model, same process, everything is the same, nothing changed. So now I look, if it crosses that line, I am in there. Let's see. Boom. I get in right here on the 15-second, and my stop loss goes below the 2-minute candle. So here's the 2-minute candle here. It goes below the 2-minute candle. Now I simply wait. I go from my 1 to 5, and that's it. Even though we're below the MAs here, realize that yes, you're below the MAs here, but on the 2-minute, you only just tapped the 6. And on your 15-minute, you haven't even started to pull back yet, for real, for real. So if real momentum is there, it'll take off, which of course you have different management styles. So you can either trade to the liquidity target top or go for your RR, whatever, or you can manage it in many different ways. I'm going for my 1 to 5. I wait it out. Pay attention to all the time frames, which is this, the 2-minute and the 15. Look at how they all look. I hit my 1 to 5 right there. Now I'm chilling. That's how I do it. And here's the crazy part. Look at where gold actually goes. So all of that playing around, gold takes off. This is the same trade the other day, right? I can show you something. If I go up to the 2-minute just to speed this up a bit, and I fast forward this, look at this. Look at the 2-minute coming back here and tapping here again. Look at it. And then now you could have scaled down and getting in there again. But look at this. Look at where this thing goes. Because momentum has now entered the market, bro. It's the same as over here when momentum entered, came, pulled back, and then entered, gone. This one here didn't pull back because, again, I didn't care about the pullbacks. On the 15-minute, I don't care for the pullbacks. But when it does pull back, it's still even then a great place to enter. As you can see, tap the 6 and go, tap 6 and go. But look at this. Look at this thing. This is just day before yesterday. This was Tuesday, right? And you already know what happens. You already know exactly what happens. Yeah, look at this. Because guess what? We are above the MAs. We already had the momentum plot. Look at how many times the 2-minute came, dipped below. But even though it dipped below, still was bullish, majorly bullish from the 15, just came and tapped here. So in here, you could have been looking for an entry and take that out again. Here it dips below again. Here's another entry point. Gone. Dips below again. Here's another entry point. Gone. On repeat, bro. On repeat. And of course, the market doesn't move like this every single day, but it definitely moves like this more often than you think. And remember the 15-minute consolidation, and then it goes back up and hunts the highs again for everybody who were trying to short the market. But see, look, I know it got disqualified, so I would have to wait for another momentum plot. So I would be chilling. But look at where this trade actually went. 1 to 59. Like if you had a management plan that said, all right, cool, once the 15 closes below the 6, that's when it'll come out. Guess what? You'd have walked away right here because that's where it closed. As you can see how I made the indicator very easy. Once it closes below the MAs, it changes colors. So bam, you'd have literally walked away with 49 RR. Literally. So if you had $100, you'd have made 4,900. If you had $1,000, you'd have made $49,000. Right? So that's the type of stuff we're working with, and that's all it is. Show you on the bearish side now. Here it is. So I just showed you how it works fractally, right? You see all of that. That's perfect. And this is just how I've been working with it. Now, of course, you can use the momentum plots on this, whatever it is. I don't necessarily use it all the time for the 2 minute. I'd rather sometimes just wait for the pullbacks and then allow it to go. All right. But again, now just to show you on the bearish side, here you go. You get your momentum plot. You wait for the pullback maybe, or you continue during the 2 minute. Here's your pullback here. And then here's a continuation. Let me just show you what that looked like really quick. This is how you backtest. This is how you study. This is how you learn. So 2 ways. Of course, you get your momentum plot here. So you get your pullback, which makes a low right here, a low right here. You know what I mean? And then you go into the 2 minute. And what does that look like? Look at this. From that low here, comes up, makes a low. And then here's the low here that you would have traded through. Gone. Gone. Here's the pullback. Because don't forget what the model is, guys. Don't forget what the model is. Push down, pull back, continuation. Push down, pull back, continuation. Why? Because it's a bearish trend. Do you get me? Do you get me? Do you get me? Do you see that? Do you see that? It's simple, bro. Honestly, it's simple. Because here's what, on a fractal level, this is what happened. See, came up, push up, failed to break the high, came back down and broke this low. Bam. Then what happened there? You could assume that this is your high right now. So what happened? Push down, pull back, left the high right there, and traded through, and you gone, bro. Same model, same everything. Here's the low. So see it here? Pull down, pull back up. In here is where you could have started to look for that short. So if I flip this bullish, what does that look like? The same thing. Look at the highs being traded through already. Bam, bam. You know what I mean? Yeah, bro. It's I can't even explain it any easier. So this is where your short would have been. Your stop loss would have been above the high. And this is just on the 2 minute, by the way. If I scale down to the 15-second, that's even way more. And this is my 1 to 5 right here. Yep. And when you see momentum like that, you can even hold it. You know what I mean? But I wouldn't recommend that. Just develop your own trading plan. But hopefully this makes sense. Hopefully that helps. Yeah, man, trading is not as hard as people make it out to be. You don't need a shit ton of indicators. And as a matter of fact, I could take off my indicator. Because if you even realize, I haven't even told you like how I'm using the MAs. But the sensible thing is that, okay, if it's bearish, I have my bearish bias over here. It's telling me that it's bearish. The higher time frames I'm seeing that are bearish because it's color coded. And then I can say, all right, once price is below the MAs, I'm looking for a sell. Or once it's above the MAs, I'm looking for a buy. Very simple, you know? So yeah, big up on yourself. Hopefully you learned something. Hopefully you found something valuable you can take away from this. Yeah, peace.